Get Rich Education is brought to you by Mid-South Homebuyers, top-notch turnkey property in Memphis, Tennessee.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education, episode 48. I'm your host, Keith Weinhold, and I'm back to help you build your wealth with education, inspiration, and actionable content with a focus on the actionable today. The abundance mentality is dispensed here weekly. No prescription required because the scarcity mentality is abundant and the abundance mentality is scarce. You know, turnkey real estate investing has been a popular topic here. It's a favored investment because you can get high rates of return and maintain a lot of control, yet so much of the work is already done for you that your ROTI, your return on time invested, remains intact along with your high financial return. A lot of listeners have told me that they want to learn about more turnkey real estate investing opportunities in more markets. Well, I've been traveling and performing my own due diligence, so I'm finally glad to bring you this today. How do 7 investor advantage geographic turnkey markets sound? With no further ado, we're going to meet Maverick Investor Group's Matt Bowles to tell us more.
This is Rich Dad Advisor Ken McElroy. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Matt Bowles is a nationally recognized investment property specialist, educator, and partner at Maverick Investor Group. Matt helps his clients buy performing rental properties in the best U.S. real estate markets, regardless of where they live. Matt was featured in major national media numerous times. Matt was named one of the top 50 real estate investment opinion makers and market leaders by Personal Real Estate Investor magazine. Matt and his co-founders at Maverick have helped individual real estate investors buy over $100 million in turnkey residential investment property across 15 states. Maverick also supports a nationwide network of real estate agents in serving their clients. Matt runs his business from rooftop pool decks in Dubai, beaches in Rio de Janeiro, and outdoor cafes in Paris. I recently saw an interview with Matt where he was in Egypt. Over the last 2 years, Matt has lived in 20 different countries. Last month, he was on the Croatian coast. And today he's coming to us from Cape Town, South Africa. Welcome to Get Rich Education, Matt Bowles.
Thanks, Keith. Great to be here. Thanks for having me.
You know, it's really good having you because you embody a lot of these Get Rich Education mantras that I often repeat to my audience, like, don't follow money, make money follow you, wherever you are. Do the right thing, then do things right. Be who you are becoming. Don't quit your daydream. You know, you really embody a lot of those things. So, you know, I really got to ask you, Matt, I mean, how do you do this? You know, I want some details. Like, how do you really live this extraordinary life? I think that's what a lot of people want to know.
Well, Keith, I do it the same way that every single one of your listeners can do it, which is the first step is to decide that you want to do it. And then once you decide that you want to do it, it's about working backwards to figure out how to get from where you are to where you want to be. And the main, I guess, strategy that I would impart here, or the perspective, which is pretty contrary to conventional wisdom, is to reorient what I would consider to be traditional values about wealth building. So traditional values about wealth building, I think, say that I want to work really hard and I want to make more and more money. And as I make more and more money, I want to buy a bigger house. I want to buy then a bigger television. I want to buy a nicer car. And as you're doing all of that, what you're doing is you're more firmly planting and entrenching yourself in one particular place. The alternative perspective, which I adhere to, is that I want to focus on the value of being location independent. I want to focus on maximizing my freedom of mobility, on reducing the geographic restrictions that I have. Okay. And so for me, it's much more valuable to spend money instead of buying things to be paying for experiences. And instead of, firmly rooting myself in one place with bigger and bigger houses and all that kind of stuff that I live in, I would rather be location independent and mobile and able to travel the world and live in these different places and have these different experiences. And it's really just a level of freedom, right? Because once you have that, then you don't have to make all the same choices that I do and travel the same amount that I do or go to the same places. But what you have is the freedom to do that or to do whatever you want. So you're really creating choices, you're creating opportunity, and you're creating freedom for yourself. And if you have that perspective and you have that as a goal, then you just start simply working backwards and say, okay, where am I now and how can I get there? And for a lot of people, it's a gradual process. It's not just like overnight, you're going to be there tomorrow. But even people that have a regular 9-to-5 full-time W-2 income job, there are steps that you can take to get there. So increasingly, regular employees are working from remote locations more frequently. You're out of the office for 2 days doing your work from somewhere that's not the office, oftentimes called working from home. But that can be working from anywhere, right? And then, of course, if you're an entrepreneur and you don't have a regular job and you're running your own business, which I do with Maverick Investor Group, then there are ways to build your company in ways that make you less geographically confined and that make you more mobile and more location independent. So, for example, with Maverick, all of our staff live in different cities and even different countries around the world. So we are not geographically tied to one particular place. That allows us to live where we want. And it also allows us for business purposes to operate in multiple real estate markets and not be tied to one particular one.
Yeah. See, I love the emphasis on experiences. That's something I talk about with my audience. We are a show that emphasizes abundance mentality to use real estate investing for lifestyle improvement, not just more cash flow, not just more real estate. Unlike things, experiences are something that cannot be used up, repossessed. There's no debt against your experience. And, I think for a lot of people, this is so simple. This is such a simple thing that I'm going to say here, but so many people overlook it. To have something different, you have to do something different. That's what produces a different result. Because you're not there in Cape Town, South Africa, or for any of these other places you've been traveling, Matt. You're not there for any sort of real estate conference or business meeting, right? You're there because you choose to be there and check that place out and feel like what it's like to live there.
Exactly right. I want to emphasize that a lot of people, when they talk about, they travel or they do this or various different things, they're kind of talking about for work, like they live in a place quote unquote for work. They're attending conferences there, or they're networking there, or they're, doing, whatever it is they may have to be doing there. But yeah, this, for me is exclusively lifestyle design choice. So, what I did this year is pick out a number of cities that I thought would be really cool to spend time in. And I went down to Rio de Janeiro for 2 months. I'm in Cape Town now for 6 weeks. After I leave Cape Town, I'm going to go to Barcelona for about 6 weeks, just for no other reason than I think those would be really cool cities to live in. And I've built my business in such a way that I can operate from any of those locations, that I want. So it's no different if I'm in Los Angeles or if I'm in Barcelona or if I'm in Cape Town.
Yeah, I think I do a pretty good job of traveling and getting around and experiencing the world, but I think a lot of my listeners are sort of living vicariously through you now. I think you do a better job of this than me. So, we've kind of begun with the end in mind here, Matt. So, backing up a few steps, a lot of what you do and the lifestyle you're able to live and the free will that you have to make in your own choices is supported by real estate and real estate investing. So how did you get into real estate investing? How did it all begin?
My real estate investing, it was actually pretty interesting, Keith, and actually not that different from your story about the fourplex, which I'm familiar with. For me, I was working at a nonprofit organization in Washington, D.C. in 2004. and I was making about $40,000 a year. So I was working really long hours. I was doing really good work that I cared about. And then one day somebody said to me, hey, you should buy a house. And I said, how in the world am I going to buy a house? I make $40,000 a year. And, you know, the houses in Washington, D.C. are expensive. And they said, no, well, let me show you. You can do it. And they got lending guidelines, of course, then were extremely lax, and it was very easy to get loans and all this kind of stuff. And so sure enough, I was able to buy a house. And so what I did is I bought a 4-bedroom house. I lived in one of the bedrooms, and I rented out 3 of the bedrooms to friends of mine. Okay. Now, I bought the house for $325,000, and I was getting rent from 3 of the 4 bedrooms to help cover the mortgage. Right. And then in 10 months after I closed on that house, I had it appraised, and it had appreciated 40% in value. So it went up like $120,000 in 10 months.
So you might have had the leverage light bulb start to go off there.
Yeah, well, the light bulb that went off, I said, that's interesting. So you're telling me that I make $40,000 at my job working 60 hours a week, and I could have just sat on my couch and played video games and done nothing and made 3 times as much money this year. I said, well, that's a pretty interesting concept. Let me see if I can parlay that and leverage that. And so what I did is I did a cash out refinance on that. And then I took that money and then I started investing in other out-of-state real estate markets. And at this point, as this whole thing was going on, I mean, starting before I bought my first house, all the way through the 10 months that it was going up in value and beyond, I just started reading everything I could read about real estate investing. Didn't know anything about it, didn't have any background in it, didn't have any, business or finance or any kind of background like that. As I said, I was working at a nonprofit. My academic background is in sociology and international peace and conflict resolution, Keith. That's what my master's degree is in. So I had no idea about real estate investing. So I just started reading everything I could read on it. And then, when I did my refi, I was able to say, okay, now I've got some investment capital. And I know that the first rule is don't buy any, liabilities or vacations or cars or anything like that with it invested in other assets. And so I said, okay, I'm going to go buy now other rental properties. And so I started studying other real estate markets, and I went out to Las Vegas at the time, which was a really smoking hot real estate market. And I started looking there, and I really started studying and just getting into the game, myself. And buying properties. I bought multiple properties in Las Vegas, and then I went to Phoenix, and I started buying properties in Phoenix. And so I went to a number of different markets and really started studying and trying it. And, in the process, making all the mistakes in the books that you can make myself and learning through doing. So it was definitely a trial by fire. It was getting your feet wet and, learning it by doing it process. And through that entire process, especially including all of the mistakes that I made, out of that came a situation where people started coming over to me and asking me, hey, what are you doing? How are you doing that? And can you show me how to do that? And I said, sure. And so what happened is a number of friends and colleagues and folks that I knew, we started going together and buying real estate. At the time, pre-construction real estate was largely what was going on then back in the 2004, 2005 period, as I'm sure you remember, Keith.
Right.
So we'd go to the developer and say, hey, if we all bought a property from you, could we get a better deal instead of just me buying one? And they were like, yeah, okay, cool. And so we would all buy property there, and then we'd all go to the property management company and, set the whole thing up. And so then, as that sort of evolved, we started saying, hey, I bet we could create a business out of this, because there's a lot of people that are looking for the opportunity to buy real estate in the best markets. They don't know where to buy. They don't know how to buy outside their local market. And if we could set this up and help people buy what we're buying and all this, man, I bet we could turn it into a business model and provide value to people at the same time. That would allow us to do it full time and, all this. And so that's what we were able to do. And in 2007, we formed Maverick Investor Group. We put all of our lessons that we learned through, mistakes that we made and everything else into what we call the Maverick approach to real estate investing, which is how to buy and hold cash flow properties and how to select those properties based on real estate fundamentals And then, we just started growing from there and developing a client base. And, it's been a really exciting ride.
That's great hearing how it came up and how it starts organically and with such a great level of fascination. I think a lot of investors have that light bulb go off at some point. It really is exciting. So, you bring up turnkey real estate investing. Turnkey real estate investing is something that, well, it was either in its infancy or it didn't really quite exist to any great degree at all yet when I bought my first fourplex building in 2002. And I wish I would have known about turnkey real estate investing sooner. So why don't you describe turnkey real estate investing? What's your definition and why would one want to get involved with that?
That's a great question, Keith, and it's a really important one because there are a number of different definitions that people are now using to describe for that term. And so, well, the reason is because it's kind of like this popular, appealing, compelling buzzword. And so people try to expropriate it and use it to describe different things and all this, as always happens. So you're right. What happened was, and I think sort of the history of this does go back because when you and I started investing back in the early 2000s, there really wasn't this industry of, what are called turnkey real estate investment and this kind of stuff. What happened was back then you were buying mostly new construction, pre-construction, that kind of stuff. And then when you had the crash, what happened is that the properties sort of the real estate market overcorrected and the property prices went down below builder replacement cost. And so you were able to then buy and renovate properties, below builder replacement cost and then rent them out. And then that was clearly the value proposition, right? And the builders were then on the sideline because why would you pay a builder to build your house if you could get it below their cost, let alone their retail price? So then that really became the value proposition. And so I think at that point is when, the industry that you're talking about started to arise. So let's talk about what we mean by that. When we use the term as Maverick Investor Group in terms of helping our clients buy turnkey real estate, what we mean is a property that is fully renovated. I mean, I guess it could be a new property or a fully renovated property that already has a tenant in place and it already has a local property management in place so that you can own that property from wherever you live. You don't have to live near it. You don't have to do any of the renovations on the property, and you don't have to be a landlord. So you can live in Alaska and you can own property in, whatever state you want to own property in without having to actually do the work on the renovation and without having to deal with the tenants and be a landlord and that kind of stuff. The advantage to doing it that way is that, number one, it allows you to invest in the best markets regardless of where you live. So again, removes your geographic restriction, right? But number two is dramatic risk mitigation because the highest risk points for people that are trying to get in the real estate game. And, so many people that listen to the, real estate, hear a real estate guru and they buy the books and tapes and go to a seminar about how to flip properties and go to the investment club and they try to, kind of go in and buy distressed properties and renovate themselves and then, do this whole process themselves. And what I've seen is that the highest risk points are during that initial acquisition, renovation, initial leasing, the whole process to get it to a performing state. That's where people lose the most money. For tons of reasons, right? A lot of times if you're buying a foreclosure property, you can't even get inside the property until after you've already bought it. So maybe it has, much more serious damage. Maybe you dramatically underestimated the repairs. If you're doing this as an individual, as opposed to, you've got to remember that you're competing with professional multi-million-dollar companies that are doing this in the same market, right? That have a lot more resources than you do. And so there's a lot of risk in that upfront point, and that's really where I think a lot of people underestimate costs. They underestimate time, which is holding costs, right? If they've borrowed money to do the renovation or whatever it may be, that's really kind of this big high risk point. And so what a turnkey opportunity does in terms of what we mean by turnkey is that it allows somebody else to take all that risk, and then for you to come in the end and simply evaluate the deal, see if it meets your buying criteria and your investment goals and all that kind of stuff, and then do your due diligence on the deal. Okay, so inspect the property, make sure all the renovation was done correctly, verify the lease, make sure the tenant is paying what they're supposed to be paying, and that's the fair market rent and everything else. Make sure everything is all copacetic, and then at that point you close on the property, and as soon as you do, you cash flow from day one. So that's really the big ticket advantage to turnkey model, I think. But let me just add one caveat, Keith, because we said that different people mean different things by this.
Right.
I have actually seen a lot of marketing where people say, oh, turnkey real estate, that's an interesting term. Let me try to apply that term to something very different and market it as turnkey. And what some people will do is they'll say, this is turnkey, and that's all that means is that I'm going to do stuff for you, but you need to come in and buy the asset in distressed condition. So it could be like any random real estate agent. It could be like, okay, you come in and I'll help you find a distressed asset to buy. And then after you close on it and you're sitting there and holding this distressed property that cannot generate income, I will then help you find a renovation team to renovate that property for you. And then after it's totally renovated, I will then help you find a property manager who can lease it out and find a paying tenant who might or might not pay this amount of rent that I speculate that they will.
Right.
So there's all of these different things, and somebody could be like, oh, it's turnkey because I'm helping you to do all of those things so you don't need to do them, and therefore I'm calling it turnkey. So that's why I sometimes just use the term performing property to come in and buy an already performing property that's been renovated, got a tenant, got property management, and you just go in, verify, do your due diligence, and close.
Yeah, turnkey to me means a property that has already been renovated, and some of these renovations are pretty extensive, is already tenanted and already has professional management in place. So you do know what you're getting, and you are able to make an evaluation of a property, based on parameters like projected cash on cash return and such before you get into it. To me, it seems a little bit like fishing. I go to the supermarket for the convenience of buying 1 pound of salmon. It's already been gutted. It's already been cleaned. It's already been headed. It's already there. I can easily evaluate what I'm getting. The other way of doing it is packing up and going on a fishing trip and getting a license and finding a fishing hole and having the gear and having the skills and expertise to go out and try to find a fish. It might end up being a profitable venture, if you want to call it that. It might not be. So, I'm just kind of using this analogy to bring up the fact that if one of my listeners really wanted to, they could go into some of these markets themselves and try to buy property there. But they're not going to have any idea of what they're getting into, identifying the right foreclosure, not just identifying the right market, but identifying the right sub-market. There might be so many things they just might not be aware of. Is the school zone boundary going to change soon? That's soon going to make that block desirable or undesirable. And there are just so many pieces of knowledge and so many economies of scale that the turnkey provider in that market has that we can't, and they're delivering that fish to you ready for consumption.
Absolutely.
I think part of what sort of perpetuates an investor to want to continue investing locally, even if they might not be in the right market, is their local agent. Your local agent has quite a bit of marketing power in your local area when it comes to buying a piece of real estate, and your local agent doesn't have any incentive to want to tell you to invest out of market here in a commission-based industry. They're always going to try to reinforce that you invest in your local market. And you might even be hearing that at your local real estate investor meeting. Buy local, invest local. They're going to scare you from investing out of market.
Yeah, and it's interesting because a lot of people that want you to invest in an out-of-state market are doing the same thing, except they're just promoting their one particular out-of-state market because that's all they have to sell, and that's the only way they make money. And so regardless of how good it is, they have to retrofit their marketing materials to promote their product, right? So the way that, the traditional sort of sales of any kind work is, hey, we've got this product to sell. Let's figure out how to convince people to buy it. So if there's local real estate agents and all they have to sell is your local properties, then they're going to try to convince you to buy that, nothing else. If there's somebody selling property in market X and they're based only in that market and that's all they have to sell, then, whatever stage the property cycle is at, however good it is at the moment to buy that property, it's all they have to sell. So they're going to tell you that that's always the best thing to buy. One of the ways that we as Maverick Investor Group wanted to intentionally navigate around that dynamic and put the real estate investor client first, as opposed to the market or the product or whatever, is that again, this goes back to the location independence theme, right? Maverick is not tied to any one particular real estate market. And the most advantageous real estate markets actually change over time. And so what we're able to do is work with each individual real estate investor as they come in our door, sit down, have a conversation, not literally in an office, usually over Skype right now with video and so forth, because they can live anywhere and we can live anywhere. But have that conversation with them about their personal buying criteria, their personal investing goals, all this kind of stuff. And then what markets might be most appropriate for what they've described as their buying criteria and their investing goals and so forth. And so, we are constantly monitoring real estate markets. We are out there hunting down the best deals and the best buying opportunities in the US, and those change over time. And we are on the pulse of those, and we're able to help our clients build diversified portfolios of cash flowing properties over time. So Keith, 5 years ago in 2010, one of the best, most advantageous markets in the country was Phoenix, Arizona. And we helped a number of our clients buy in Phoenix, Arizona. It was one of the first markets to peak, and it was one of the first markets to bottom out around 2009, and then started the recovery cycle in 2010. Well, about a year or two later, that market had soared up so much. The prices had gone up so much. Everybody that bought there did great. They rode that wave of appreciation, but It did not make sense to continue buying in that market because what had occurred was a process of what we call yield compression. The home prices went up and the rents did not rise as fast as the home prices did. So if you locked in a low home price, you got an awesome price to rent ratio, you got it locked in, you did great, you just rode the appreciation and just made equity. But if 2 years later you were to continue to buy in that market, you'd be paying a way higher price, but you would not be getting a proportionally higher rent. Okay, so your cash flow margin would be much smaller than the person that bought when, back in 2010, right? So at that point, 2012, it makes much more sense to continue buying in a different market, even if you want to hold that awesome property that you bought in 2010. It doesn't make sense to continue buying there. And so, the real value proposition that we wanted to bring to the table when we formulated our company was how can we put the investor first and help the individual, create a long-term relationship with an individual investor and help them continue to build a portfolio over time in the most strategic markets without, being tied down or compelled to continually promote one particular market. And so that's what we've done.
Right. Locals put the market first. Maverick puts the investor first.
There you go. I like that.
Could use that as a marketing campaign right there.
Absolutely.
When someone asks you, Matt, what are some of the reasons that the best turnkey real estate markets change over time? Do you have any other examples there?
Sure. I mean, the first thing to remember is that real estate is very local, meaning that each local market goes through a local property cycle. And those do not all happen at the same time. They happen at different times. So Phoenix is a great example. It peaked around 2006, and then it started crashing at the end of 2006 and hit the bottom around 2009. There's other markets like, say, Birmingham, Alabama, which didn't peak until 2009. Okay, so Phoenix was already at the bottom. Birmingham was still hitting the peak in 2009. Okay, so these markets were at very different points in their property cycle. So in 2009, it was more advantageous to buy in Phoenix, not to buy in Birmingham in 2009. But then now, 2015, or 2014, over the last couple of years, it's more advantageous to buy in those markets that started the recovery cycle later. Okay, so when Phoenix already went back up, other markets were just hitting the bottom. So go into those markets that are having a later stage recovery cycle. Now, I don't want to oversimplify this because this doesn't mean that you don't want to buy only because of, the market is, near the bottom or it's near the top or whatever. You don't want to have that be your exclusive criteria, primarily because you definitely don't want speculation to be your primary buying criteria. You don't want to bet on home price appreciation as your primary buying criteria. That should be a bonus.
For sure.
What's more important about understanding the property cycle, Keith, than just, it has a whole potential to go way back up in price. What's more important is to look at the price to rent ratios. Okay, so typically, if a market is more towards the bottom, or it's in the recovery cycle, but it's still got a ways to go to get back up to that sort of equilibrium point, to look then also overlay that with understanding the rental market. And if there is high rental demand and the rents are quite high, but the home prices are quite low, that's where you're going to get your cash flow margin. And if you're in a healthy market based on real estate fundamentals, so you got job growth, you got population moving in, you've got upward pressure on rents, you got a lot of rental demand, and the home prices are still low, and still recovering, those are a lot of times very advantageous times and moments to get into those real estate markets.
Sure. Yeah, I hear a lot of times on this show, I just use the metric, the rent to value ratio, what I think just kind of flip flops the price to rent ratio, where, typically if you get a ratio of 1% or better, 1 month's rent being 1% or more of the purchase price, that's typically one indicator of a cash flowing property with a 20% down payment. Of course, that's only superficial, and you do need to go below the surface. But yeah, I think, it's pretty typical in a market, sometimes because it's the injection of hedge fund money coming into a market and buying a bunch of properties, that prices typically appreciate faster than rents.
I think that's been one of the factors that we've seen in place since probably around 2009 or so that started. And it was very interesting, Keith, because a lot of the private equity funds or hedge funds or other sort of large scale institutional investors, who most of whom had never bought residential investment property before ever in their history, right? They had either bought no real estate, right, or they had bought exclusively, commercial real estate. And so what was pretty amazing about that whole episode is the validation, I think, that, Wall Street and, the sort of financial establishment, if you will, started all of a sudden validating a lot of the stuff that we had been saying for quite some time. We, as in, Maverick and you and other people that have been investing in residential real estate, right? Which is how advantageous this asset class really, really is. And so I think they saw, what they call a market inefficiency and said, wow, this actually is more advantageous than commercial or all this other kind of stuff. And we really should start loading up, on these properties. And so a lot of them did that. I mean, they bought thousands and thousands and thousands of single family homes. And it was pretty interesting to watch.
One question I hear investors have sometimes when they're going ahead and looking at a turnkey real estate investment, sometimes I hear, wait a moment, am I paying somewhat more for a property that's a turnkey property with a turnkey provider than I would be with a comparable property, just buying it from an owner-occupant or another individual? What do you say to people when they have that question?
So there's a couple things to understand about the turnkey model as we're describing it, as we're talking about it. So Maverick Investor Group, as I said, what we do, we take the investor first and talk to you about your buying criteria and your goals and all that kind of stuff, and then what markets might be best for you and this kind of stuff. Now, we have then relationships with teams on the ground in the most investor advantaged real estate markets, which, as we said, change over time. Okay, so we're no longer in the Phoenix market as the example I just gave you. Maybe we will be, in the future, again, as the market cycle changes again. So depending on when you're listening to this, maybe we will be again. So we have, teams on the ground. And when I say teams on the ground, I'm talking about independently capitalized, multi-million-dollar professional companies that do this at scale. And so what you need to understand when you're buying a turnkey property is that you are being able to take advantage and leverage both their knowledge and local expertise, which goes back to what you said, Keith, making sure that you're buying in the exact correct micro market. And sometimes that's as specific as, which, street or block you're actually buying on in a lot of these markets, right? Not just which zip code you're buying in. And so not only do you have that, but you have the ability to leverage their economies of scale. And so what you need to remember is, yes, of course, they're making a profit and it is a business for them.
Sure.
But what they're getting paid for is, number one, their expertise. Number two, the risk that they're taking. We talked in the beginning about the dramatic risk mitigation that you get by coming in and buying a performing property. And then number three, what's really important to understand is that you're being able to leverage their economy of scale. Okay, so let me tell you what I mean by that. If you as an individual are going in to try to, either flip a property or buy a distressed property, renovate it, and then lease it out and hold on to it, okay, you are going to be pretty much paying retail price for everything. What you need to understand, and let's even start before the renovation, the acquisition of the property, what properties you're going to even have access to. You got to understand that these professional multi-million-dollar companies, first of all, they get access to all the best properties. They have the relationships. They buy the most property. They do the most volume. And so they just get access to the properties before they come in the MLS and before you get access to them as an individual, period. So usually the properties that you're picking from are the ones that they didn't want. So let's start with that, okay? Then when you move into the renovation stage, they renovate at scale. So if they're doing 20, 30, 40 properties a month sometimes, guess what? When they go to Lowe's or Home Depot to buy their materials, they're getting substantial discounts on those materials. So they can renovate each property for way less money than an individual trying to do it themselves. And they've also got then, usually in-house construction crews. And, so the whole thing is from materials to labor to acquisition to everything else is completely at scale. And therefore, the actual cost of them to produce a renovated performing property is much lower than your cost as an individual to produce the same performing property. So they can actually build in a profit margin for themselves, for their business, and still deliver you the asset at the same or a better price than what you'd be able to get it yourself. And they have taken all of the risk, because you've got to remember, if you're doing the renovation and you're leasing out the property, all of the time that it takes you to do that are holding costs that you are paying for. When your capital is tied up, you're paying for that. So keep that in mind. And again, the main thing that I would say to remember is risk mitigation. You are able to go in, evaluate a performing property, and close on a cash flowing asset. That's the value that they deliver. That's the value that they're getting paid for. And of course, you always can do an appraisal on the property. You can independently verify the market rents, and you can independently verify that you're not overpaying for the property. Of course, there's tons of mechanisms to do that as well.
Sure. That was really well explained. I mean, maybe taking it back to the fishing analogy, before a commercial fishing vessel launches out onto the sea, they're taking a great deal of risk just to get that vessel operated. In order to get those economies of scale means that, they need to pay, the overhead for a huge vessel, and they need to pay for a crew. And they can go out there and they have that local market knowledge. They know where that right fishing hole is. They can go up and gather a whole lot of fish in a very economic way, have enough profit for themselves, and yet there's enough margin to go ahead and deliver that fish cleaned, headed, gutted, ready to go for you as the consumer, and still be a great value for you.
And you want to know what the really, at the end of it all, Keith, the biggest value that's being delivered is that you, the investor, are saving your time, because time is your most valuable asset. And so if somebody else is doing all the work and all you have to do is go in and then just knock out your due diligence and buy the property and collect your checks, when you get to the more advanced end of the wealth building spectrum, wealthy people are looking to save their own time. And the biggest thing that turnkey real estate investing does is it allows you to save your time. That's your most valuable, non-replenishable asset.
That's right. Once it's gone, you can't get it back. And that's one reason why I'm a turnkey believer. So, we've talked about markets and processes a little bit. So to just kind of wind this down somewhat, Matt, now, the right market's been identified, but how are you sure when you're in a market that you're getting the right provider? I want GRE listeners to be looked out for. Everything from, how do we know that there's a process there so that when a turnkey buyer buys, they truly have an independent third-party home inspector, not just a provider's cousin or something like that, all the way through to making sure that that company provides sound management for the turnkey investor. How do you vet that stuff out?
Absolutely. So The first thing is that we, Maverick, of course, go into every single market and build these relationships personally. So we meet with all of the different people on the team. We walk through their properties. We look at what they're doing for their renovation standards. We look at what they're doing for their property management screening process. We look at what they're doing. I mean, we go very deep into, assessing their business operations and that kind of stuff. We also make it very clear to them that, a business relationship with Maverick means that they're going to prioritize and take care and give special treatment to every single client that comes through Maverick. And if at any point that didn't happen, the entire business relationship is in jeopardy. So there is a major scale and a community comfort, I think, in volume in terms of the way we position the business relationship in the first place. But the more important answer to your question, Keith, that I want to really emphasize is that what we tell every single real estate investor is that we don't want them to just, quote unquote, trust us. Like, don't worry about it. It'll be fine. We've already looked into this. Seriously, I mean, in business or in investing of any kind, in any space, anywhere in the world, the reality is that, things can change over time,
sure,
right? I mean, just because I went down and everything looked great and perfect when I walked through everything doesn't mean that 12 months down the road, a company doesn't grow at a scale that, is too fast for them, or, something might happen and different quality, changes might take place or things like that. I mean, business and investing is a constantly dynamic, changing process. And so, we never tell people, oh, don't worry, just trust us, it'll be fine. What we do instead is we educate each investor that they need to execute an objective, third-party, independent due diligence regimen on every single property that they buy. And so, I've got plenty of clients that might buy, 3-4 properties a year from us. And what I say to them is, oh yeah, the provider's great. Every property's been great so far. We have a good relationship with them. Do I need to do an inspection on the fourth one that I buy? And I'm like, 100% yes, you absolutely do. Don't ever skip any of these steps. And so, what we want to do is not to promote or vouch for or say just trust us on this. What we want to do is educate you on how to buy these properties and how to perform your own due diligence. And so you should be, calling up your own home inspector from an independent home inspector company in that local area. We can provide you with a list, pick anyone you want, or just Google it and do it yourself. They go into the property, they inspect the property, they report to you, not the seller. They work for you, not the seller, certainly not Maverick, and then you get the home inspection report. They go through everything that might need to be fixed before closing, and you just give that to the seller and you say, hey, make sure you fix all these things before closing. And then you either send your inspector back to verify it was done or verify it in some other way. So that's one example. And then certainly, make sure the same thing with the tenant, you see the signed lease, you're making sure you're verifying that is in fact the market rent. I mean, we have, services that we introduce our clients to where they can independently verify, okay, what should the market rent be for this particular area, and all this kind of stuff, just making sure independently, not because Maverick told you so, not because the seller told you so, but empowering yourself and educating yourself on how to objectively and independently verify and evaluate deals so that you can do that on every single one that you buy.
Sure. Because, of course, nothing's more reassuring in life than hearing from somebody, oh, don't worry about it. We've got it all covered, right? Nothing's better than that.
Exactly. And remember, once you buy the property, okay, you own the asset. And so if at any future point, let's say the property management is great for the first year, but let's say, 3 years down the road, you're no longer happy with the service that the property management company is giving you. Guess what? You can change property management companies. You can use any company that you want, right? So, it's your property and you get to make all of the decisions, about that property that you want. And it's up to you to evaluate that deal. And we want to empower you and educate you and provide you with resources that can help you to do that independently on every single deal.
Sure. Yeah. Things like that, management problems. I mean, things like this can happen and change in every business because businesses are made up of people and some of those people change over time. So, before I even decided to affiliate with Maverick, I put boots on the ground and went into a Maverick market. I've walked through probably 12 to 15 renovated homes in a turnkey market. I checked out the turnkey places everything from their warehouse to, looking at submarkets on a map before we drove out and visited them to, vetting their property manager, all the way to seeing that there are indeed collected tenant security deposits on leases. So you really offer something fantastic to the prospective buyer and investor, Matt. And, you really do embody the lifestyle design that I emphasize as a desired outcome on my show. So, because ultimately all this successful real estate investing, it isn't about property, or it isn't even about cash flow. It's about lifestyle arbitrage. So is there anything else out there, Matt, you'd like to talk about that maybe I did not ask you?
I think you're doing a great job, Keith. I mean, the thing that I would say for folks, especially newer folks that are getting into the real estate game, is think about the end goal first. We started off this way and we can sort of, conclude this way. Think about the end goal first, about what you ultimately want. Where would you ultimately like to be? And don't, put any restrictions on that. Don't say, oh, but I couldn't do this because there's this obstacle here or whatever. First of all, just figure out what that is, what kind of lifestyle you would like, what you'd like to do. I mean, it's hilarious. I tell people, oh, yeah, I've been to, lived in 20 countries in the last 2 years. And they're like, oh my gosh, I don't have nearly enough money to go do something like that. And I tell them, guess what? My total lifestyle expenses have been lower doing this, including airfare, than when I lived in LA full time. I mean, I have literally reduced my living expenses by doing what I'm doing now than when I just lived in LA full time. And so, a lot of these objections, whether they're cost objections or whether they're whatever, they're things that are ingrained in us from all sorts of different socializing agents, which oftentimes are not really the case. And a lot of times getting to where you want to be can be much quicker and easier than you think it is if you put your focus towards that. And so I think that real estate is really the preeminent vehicle for lifestyle design, and you need to view it that way. View real estate not as an end in itself. View it as a vehicle for getting where you want to go, for helping you to create passive income, and for helping you to create the freedom of mobility and the location independence that you want, and for recapturing your time so that you can design your lifestyle the way you want. So start with that end goal in mind, really envision that, and then work backwards to say, okay, what would it take to get there from where I am now? And that's exactly what we help our clients to do, Keith, and to use real estate as a means of doing that.
Yep. One has their priorities lined up right, I think, when they begin with the end in mind. Matt, do you have any good online productivity resource or app, or maybe a book that our audience should read?
Sure. I'll recommend a book, Keith, that is a book that I've had for many years, and I continue to refer back to it regularly. And I think it's a really, really important book when it comes to real estate. It's called What Every Investor Needs to Know About Cash Flow and 36 Other Key Financial Measures. And it's by Frank Gallinelli.
I've read it.
You have read it?
Yeah.
For me, it's one of the most important books out there because it really helps you to understand how you should be financially evaluating real estate deals. And in this day and age, I mean, the stuff that I see out there in the real estate marketing landscape is all over the place with terms that people are throwing out like ROI and, how they're calculating capitalization rates, which is all different ways, and how they're, talking about various different concepts and terms. And this book really helps you to understand the accurate financial formulas and how you should be using them to evaluate your real estate investments. So that's the book I'd recommend.
I'm glad you brought that up because I have not mentioned that book on my show yet. It is an important book. It is a pretty numbers-heavy book, and that book has, frankly, it has a title so long I can never remember the name of the book. But Frank injects just enough humor in there around the numbers to keep it readable. So I'm glad you brought that up. This has been great, Matt. How can our listeners find out more about you?
Well, Keith, for your listeners, I'd like to make them a special offer. I had mentioned that, number one, I had gone through a lot of real estate investing, made a lot of mistakes myself, and really come out of that with sort of the Maverick approach, which is what we use to help people buy real estate. And, over this past year, I've seen a lot of real estate investors that are not part of the Maverick community, that are not buying on our model. I've seen a lot of people make a lot of mistakes and lose a lot of money in various different ways. And so what I did is I put together a 36-page report, which is called How to Avoid the 7 Biggest Mistakes That Real Estate Investors Are Making in the 2015 Boom Cycle. And I want to offer this report to your listeners for free. And the way that they can get it is to go to maverickinvestorgroup.com/GRE. And when you go there, it's just going to be an opt-in. You just enter your name and email, and you're going to be able to get this report for free. It's a 36-page report, and I think you'll find it pretty helpful and substantive. I've worked pretty hard on it, and you can go to maverickinvestorgroup.com/GRE.
Matt, thank you so much for putting that report together. That's just going to be of such a benefit to our audience, as is our relationship with you. So, we look forward to having you back over time. I really believe in long-term relationships. I think we're really in the right one here, Matt. So thank you so much for setting up maverickinvestorgroup.com/GRE for that report. And Matt, this has been huge. Thanks so much for stopping by.
Thank you, Keith. My pleasure.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.